Good morning, Jim Barrett from RJO Futures. Wednesday, the 30th, last day of the month, last day of the two-day Fed meeting. Fed again is likely to announce they're going to cut the bond buying by another $10 billion, bringing their monthly to $45 billion. Everybody expects this. There will not be a meeting after the announcement to explain where they're at. And so, really, not too much had happened. I mean, as everybody knows who trades in notes and bonds, we've been locked in a very tight range, say 135 and a quarter on the upside in the bonds, to 133 and a half to the downside. Notes even tighter. And we're likely to stay in this 260 to 280 range if we get this news. If we don't get the news, I mean, it'd be pretty surprising if we didn't get the news. Even with the weak GDP this morning, which surprised people, it was only up 1/10 of 1%. Obviously, pretty poor showing. However, maybe this is the last of the weather effect. Of course, the nasty winter of 2014 is behind us, and things are changing there. In fact, there was a PMI number that was actually better also this morning, and the ADP guess on payrolls was better than expected at plus 220. So we have that to deal with Friday. In between then and now, of course, the Fed meeting announcement, jobless claims tomorrow. Janet Yellen, even though there's no speech after this two-day meeting, will speak tomorrow morning. PM Manufacturing Index, the national one, will be out tomorrow, always follows the Chicago one. ISM Manufacturing Index, also construction spending. So, there's a lot tomorrow. Challenger job cut report also. Then on Friday, as I mentioned, the unemployment number, and also with that, factory orders. So there will be a lot of news. Maybe some turbulence finally at the end of the week here. We'll see. Stocks just waffling this morning. No real clue from them. However, a lot of commodities are getting beat up. Silver practically on new lows for the year. Gold under some pressure. Crude oil under some pressure. Crude busted. The front month is busted underneath $100 a barrel. So certainly no problems from the commodity front anyway as far as inflation. And, Yellen had mentioned three considerations that will affect their timing as far as short-term rates. The extent of slack in the labor market, which there's probably still a ton. Outlook for inflation looks okay. And downside risk of growth. And after a 10th of 1% rise in the GDP, that's there too. So even though there will be no clarification of what they're thinking after the meeting, there's no reason to expect any change in the idea that any kind of rise in short-term rates is a long way in the future. I can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.